coming on to the show today, man.
Thank you very much for having me.
See ya. Okay, guys, up next, we got Chris Pulver taking over the show, talking a little bit more markets. Up today, stocks pretty good bounce back. Nasdaq up 1.8, S&P 1.5. Silver's kind of flat, gold's kind of flat, dollar's flat. But to take it from here, we got Chris Pulver going to be hosting and taking a look at some markets with you guys. Before I go, remember, we are doing Edge Finder Free Week. If you just tuned into the stream here recently, this week we are doing a free access period to the Edge Finder. That is correct. We are literally allowing everyone to use the Edge Finder for free during this week. If you don't have a copy already, here's how you can get access. You got to join our Telegram. So join the Telegram. Completely free to join. Then look for this post, click this link to fill out the form, and then you will get access to the Edge Finder for a week for free. That period ends, this says March 28th, but we're actually going to extend it to the 31st. So there's your chance to try out the Edge Finder. Enjoy it. Do me a favor. If you try out the Edge Finder this week, please send us some feedback. Drop a comment on the YouTube channel. Message me on Discord, message me on Telegram, message me on, actually, I don't really use Telegram for messaging, so don't message me on Telegram because it's probably a scammer, so be careful. But yeah, drop a comment on the YouTube channel. It's the best way to give me some feedback, give my team some feedback on how we can continuously improve this tool to be the best thing for traders looking to bring macro fundamental analysis into their trading, as well as sentiment data, institutional tracking, retail sentiment, put to call ratios. We got some powerful tools for the retail trader. Let us know your feedback and don't miss the opportunity to try it out for free this week in our free Telegram channel. All right, guys, up next, Chris Pulver taking over the show. We'll be right back after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How we doing? Happy Monday. Good Monday indeed. So a lot of trade management going on today. This is part of the plan of kind of enjoying some of these short-term trades, enjoying some of these planned trades I've had since the beginning of the year where I had some hedges. I worked out well. I was positioning for this larger cushion, which we got. Now the market is responding back. Some of the key technical levels that I'm watching, we are above the 30% zone with today's gap, so I think that's a good sign. That's a pretty encouraging level to get above this 30%. This is the SPY on the 4-hour time frame. Let me go to the daily really quickly. So the daily, the nice thing about today's price is we are above the 200-day moving average. That is the exponential. So if we get above the 30%, then I'm looking for this to head back into the 38%, possibly with any continuation and traction, getting back into the previous lows here. And that's right around the 50% pullback zone, around 580 to 581. So I'd say a key level based on last week's resistance would be that today, tomorrow, if the market is going to continue just to head higher, or of course the market can stall and then still look for a push higher. I think this is a key level just to see the market fight back for the end of the quarter. Monday's expiration, Q1 expiration, are we, above this low? If so, that's at least the market taking back a little bit of the pain that was caused. We're starting to hear some rumblings with the tariff deadline on April 2nd being more starting negotiation, being more flexible, and it's not just a blanket tariff announcement. It's going to be like individual countries and who we're going to negotiate with. So it sounds like there's a bit of softness from the tone of the Trump administration on tariffs right now. So look, all this has been discussed. I mean, we are pulling back. That is good. We've had some really big sentiment readings that have been, I would say, overblown. 3-4 weeks in a row of this AAII sentiment reading near some of the biggest extremes we've seen. So from February into last week, Wednesday's print, we're looking at like a 38 to 40% differential between bears and bulls. Again, sentiment's not necessarily a signal, but it just shows that this market, even though it's had a 10+% correction, barely over 10%, we're starting to see some of these sentiment readings that are as bad as they've been since like major crisis situations. So this little pullback is not a surprise. I still think this is an opportunity to be looking at your portfolio to de-risk or de-leverage, and that's precisely what I'm doing. So a quick example would be, Tesla had a nice little rip. We're trading up to 272 right now. Tesla's already up, $13 on the day. I should have a good looking trade here for Tesla. It was a ratio spread. Right now, this trade for Friday is up a little bit of profit. If all goes well, I mean, there's still a lot of volatility ahead, but by Friday, if we're above 250, I don't take on any assignment. I did take assignment on 3 accounts last weekend. I had a 255 assignment, so this is what I did this morning. I didn't want to be super cute with it. I looked at it as there's income opportunities here on Tesla. I don't know if the bottom is necessarily in, but I went ahead and I know my break even on Tesla is around 247.80, and I sold a 247.50 call for $16.66. I did this on 2 other accounts for $17 and $18. So that brings my break even on the high end. Break even on Tesla high end is $232. So 232.83. If I get it called away at 247.50, I make $1,467 per share or per account. So this account makes $1,467. The other ones that I'm lowering that, but it would go like 229.63 minus 247. So anywhere between $1,500 to $1,700 on those accounts. I'll just round out to the low end at $1,400. And for a quick flipperoo, $1,400 times 3, turn income on Tesla for about $4,200 by Friday. What does price have to do? Stay above 247.50. I think that's doable. I said last week when I was going to get assigned, if it stayed below 255, I'm going to get assigned. What I'm going to do is assess whether or not I want to put a collar trade on or just go out and sell a very aggressive covered call, which is what I did. It was offering, $16 to $18 of credit this morning, so I'm taking it. I get it that the price might be up, and I could just hang in there and hope that it goes up. Look, I think Tesla has all sorts of room in the near term to recover. But I also have these income trades like this one that is for this Friday, that if I turn this into $1.29 profit, I'll take the income on that one, add it to my assigned shares in my repair. This one, if we go a little bit higher, same thing, same. So, potentially I was taking on maybe 200 to 300 shares of Tesla, which I don't really want. So I'm just going to take them in little 100 share chunks. If they're assigned, if they're not assigned, it should work out fine. But that's good. Also had a bunch of trades running. Some longer term iron condors have worked out pretty well. When we had kind of the peak of the sell-off here, once we got into this chunk to the downside, the IV rank was starting to climb quite a bit. So let's go to SPX for a moment. So when we started to drop aggressively, after we stalled here, we started to drop. I started to sell some premium, and a lot of those trades are looking pretty good. So right now, I do want to check on a couple of these accounts. I have some naked puts. This naked put combo is currently up around 85, 76, and 80% respectively. My max profit would be about $1,000. I'm up almost 80% of that. I don't really have to worry about these, but if we go lower, there's going to be some risk on these. To me, 80% of max profit is good enough. Also, buying power, I want to get it back. I'm still raising cash. I got another $230,000 in cash from last week. That's just closing out winners and closing out profit and getting more buying power back, which I think is an important thing to have in 2025. So this little combo here, let me see if I can close out all 3 of these. Max credit would be 988, and I'm gonna see if I can close these down for, let's see, 988 minus $2 would be about 8. Yeah, that's about right. Okay, let me see if I can get this for $1.95. Up the debit just a little bit. Max would be $2, which isn't bad. $1.96, $1.97. Don't make me take the ask price. All right, ask price of $2. $2. Okay. So QQQ. QQQ, that was 3 puts for winners. 988 closed out for 2. All right, so closing that one down and getting back some additional buying power. So those puts are gone. Now I just have this 111 trade. Okay, I'll be watching this one closely. That one's fine. Okay, so that's puts on the Qs, puts on SPY. I just have this one. It's up 80%. Max will be 567. It's up 451. 430 is way down there in the SPY. This is only 90 days out. I doubt the SPY is going to go all the way down to $430. For the SPY to drop to $430, anything is possible. And honestly, if I'm up 80% of the profit, I don't really want to take on the unnecessary risk, but we'd have to have just a absolute astonishing decline to go all the way down to 430. So we'd have to have a 30% decline in the next 90 days from peak to trough. That'd be one of the worst starts probably in history. So I'd say the probability is I don't have to manage the trade, but considering my max profit is 567, I'm up 80% of that already. Take the profit, be capital efficient, move on. Because if I sit on this trade and price sells off again, we get another swell in volatility. I'm not up $452. I'm up a fraction of that, or it has to get closer and closer to expiration. So for this one, same thing. I'll probably just take the profit, move on. Okay, Lee, you mean the bearish trend is still intact? I think we have a rally in a bear market. Bear market's going to be, I don't know. I don't know if we have a bear market. Like bear market was 2022, right? So the proof of that is going to be we go from high to low. We have this as a near-term pullback, and then we flush down for another fresh low. Then we are talking truly bull rally in a bear market, and then that's going to change the narrative quite a bit. If this market flushes down for a fresh low, yeah, then we have a bear market, and we're having more of those bearish claws, and they're getting worse, and I don't know, things get worse before they get better, right? Let's see here. All right, so I'm going to take this put off the table here, 567, close this down for like $1.20, $1.17, not bad. So that was play on the SPY. That was a put. So 567 for $1.17. Close that one out. All right. So today for me is a lot of trade management, profit management. I'm almost back to the highs for the year, which is pretty encouraging considering we're nowhere close to the all-time highs. That's been nice. So this is part of the plan of just trading through whatever the market throws at you, finding good trades, being pretty well diversified, and picking my battles. So want to take advantage of it when I can. Just going to double check on a couple other positions here. So Qs. That one's fine. Okay, so this one's up 80%. I'm just going to take the profit. So 564, closing for $1.14. $564 for $1.14. QQQ. All that was selling a naked put at kind of the height of this volatility push to the downside. SPY. Let's see here. There's a put. Okay, so there's a put for June, up about 80%. This one is a wider credit spread. Oh, that's a hedge. I'm going to put this one as a hedge. There we go. So we got a hedge on for the end of the year just in case. Naked put up about 80%, 568. $568 should be able to close out for $1.17. $1.17. Not bad. Okay. So next account, SPY. This one is my hedge. This one is my naked put. Closing that one down. Good. Qs. This one has a combo puts here. So these are all naked puts during that height of volatility group. Naked put combo. April 17. There it is. So these trades are fine. This trade is fine. Watching that one closely. All right, so this one, 988 and closing down for hopefully less than $2. Last one I closed out for $2, which gives me $7.88 of profit. And it might be the same thing here. That is the ask price. $1.99. Save myself one whole penny. Hooray. But buying power. That's what I want back. Okay, so Q's looking good on that naked put combo. SPY closed out. Naked put 569. Close it out for profit. Okay, good. And then more to come. All right, a couple more to review. Q's. Widespread for June. I took this on like every account. Either I did a widespread. So max profit here, 247, showing up 77%. I mean, again, I might just take the profit. It's like it for me to sit for another 88 days and try to get an extra $50 out of this trade. I'm just going to take the profit. So 247. Close this for hopefully 57 cents or less. Ask is 59. Close at 59. So 247, close out at 59. $188. Happy days. That's Q's. SPY. Similar there, the 440 by 390. Collect the 216, it's up 208. It's going to take the profit. I'm up 96% of my max profit. It's going to take it. Closed. Good on SPY. And then I do have some XSP trades to manage today as well. This one is okay. Let's get these all labeled. Easier to navigate them. Got a bunch of trades running. Looking good for profit. So good stuff there. Okay. Next account, Q's. That one just has it to April. SPX. Close out. Yep. I've got to close out some iron condors. Got to close out some combo trades, bull put spreads. Again, these are good problems to have. Closing out for a bunch of winners, closing out for getting a bunch of cash back, making some profits along the way. Never feels bad. Okay, SPX. I'll close this one down. This is a $5 credit, trading for 137 bucks right now. Closing for hopefully 380. 375. I'll take that winner. $1.25 a contract. And then this one should be trading for like 350 or less. 345. 350 should not be a problem here. Close for profit. Very good. Okay, taking the winner on that one. XSP. Some winners in here. All right, come back to that one. Next up, Q's. Trades fine. SPX. $375 on that one. 345. Nice. So this was for $1.55. This is for $1.25 per contract. Not a bad fill there. SPY. This one is a hedge. That's a bear put spread out to the end of the year. This trade's looking good for April with some partial shares. SPX. Better. Okay, good. Okay. So let me keep working through the accounts really quickly. Not all these trades are in. Some of them are cash accounts, IRA accounts. I had to be a little more creative on taking those trades. This one is looking good for profit, though. $370. 375. I closed out on this one a second ago. 375 got filled good. So that's a winner. SPY. This one is a hedge. Okay, that trade's still running. All right. Good there. This one should have some naked puts. Qs. Here's my naked put combo. And then I've got a 1111. Same thing. So this one, $9.74, up about 80% of that. Taking the profit, moving on. Closed. SPX. Closing that from $5 down to $3.75. Okay, got a little bonus trap on this one. This one's almost at full profit. This one's part. Let that one go a little bit longer for this week. Okay, so Qs are good, SPX is good, SPY should have some puts as well. This is a hedge. And then this is a naked put. So hedge is in, naked put looks good. This one I own shares on the SPY. Repair trade in this one, I'm up about $2,300, and this is almost full credit on the covered call. I'm up 89% of that covered call. That goes out to the end of the month of April. So that gets called away. That's a repair trade I've had going for the last like 60 days. Naked put 569 up about 80%. I'm just going to take the profit. $1.16. Taking the winner. Okay, very good. So widespread on that one. Income trade this week. As long as Tesla stays above 250, there's income trade on this one. Stays above 255. Stays above 245. Potential assignment risk on one of these chunks. So I think if we stay above 250 this week, that's a good thing. I'll keep an eye on that one for this Friday expiration. There's also a profit trap here, which we'll find out if I get it or not. So we've got NDX trade. This one needs a little bit more time. That's out to a Monday expiration. Qs. Those are fine. SPX, this one I can close down. So $5, closing for $3.70, hopefully. Nice. $1.30 winner there. This profit trade looks pretty good. So pulled in 60 cents. Right now it's trading for about $70, which is just a small profit trap in this one for April 17th. So 60 cents should be trading for like a 10-cent credit. So you might get 10 cents credit on this one. This is an SPX trade, so I can either get 10 cents or 5 cents. If I can't get 10, I'll let it hang out there and just pend. SPY. 540 by April. This one's okay. I'm up about 50% of the max profit in this one. I'm going to try to hang on this one a little bit longer. Maybe take the 50%. All right, close that one down to get some more buying power. Taking the winner. All right. XSP. I'll manage those in a little bit. All right, almost there. We'll get some top down here in a minute. Appreciate everyone just give me the time to look through everything. I've been doing this like literally since opening bell. So just a lot of stuff to look after today. This is a cash account. This one's like super simple, but yeah, just combing through everything. Lift already up a little bit. That's good. Okay. SPX. This one is up a few bucks. Close at 360. Nice little winner there. This one, 60 cents. Pull in that 10-cent credit if I can. Oops. Okay, let's see if I can close these down. All right, got a 5-cent bonus trap on that one. That's fine. Get some buying power back. And this one up 150 bucks. 330. Okay, 170 bucks on that one. Good. With some buying power. Okay, taking a $5 profit trap on that 1111 trade. So pulled in 60 cents, walked away with 65 cents. I'm happy on that one. Cash account's fine. This one, this is a hedge. On this one, run a little bit longer. And one more account. All right, so profit on that trade, profit on that trade. This one's still hanging out a little bit longer. This one hanging out a little bit longer. This one hanging out a little bit longer. Okay, I'll be keeping a close eye on those. And lastly, MicroStrategy up to 324. It's not a bad thing. Qs in profit there with a little bonus trap. In profit here with a little bonus trap. And in profit here with a little bonus trap. Good. All right, so this one is 96 cents. I should be able to close this one up for a little profit winner. This was on a Monday expiration. I'm just going to close this one down for a 5-cent bonus trap, hopefully. I mean, come on, Qs. Ask price is 3, so shouldn't have to go too much lower than that. All right, bonus trap right there. So 96 cents, close it out for 100 bucks. Get some buying power back. This one, this one's out to Monday, 46 cents. And trading for a tiny debit. Let's see if I can get 46 cents. All right, so close it out for 40 cents on 2 contracts. Take the winner, get the buying power back. And then this one up a little bit. I don't mind just taking the profit. It's up about 54% max profit here. I'm just going to take it. For an IRA account, buying power is the most important thing. So I'll take the 50+% winner. Come on, mid-price. The heck? 50 cents. All right, filled at 27. So just under 50% winner on that one. Okay, so I still have to manage a bunch of XSP trades. I'll do that offline. Let's get going for a little top down here. Appreciate everyone's patience. This is, all is well. I mean, it could be a lot worse. We could still be navigating this downturn. I think a lot of this little relief rally is just based on, overblown sentiment, a little bit of softening narrative, a little bit more quiet on the tariff side, not as much like retaliation and just hammering that down the media pipeline. also, I mean, I listened to a lot of good content this weekend, kind of get the case for both a bear case. Here's what I didn't hear. I didn't hear a bullish case for dramatically all-time highs this year. I know a lot of smart macro analysts that were talking for, like a 6,200 target this year, 63, 6,400 target the year. A lot of the changes in, analyst targets for the S&P this year is based on earnings compression. So the one thing that's going to keep the markets pretty resilient would be continuous consumer spending and earnings that are stable. I think there are downward revisions on earnings, but I think stable earnings, not just this massive, like, oh my gosh, we're 10, 15, 20% overvalued on these earnings plays. That would be probably the next like harsh reality check for the market, is if earnings are really revised lower. So the Mag 7 coming down as swiftly as it did, that brought down the overall S&P. One thing as far as this comeback and this pullback, I wouldn't be surprised if the Mags is up today. That doesn't surprise me at all. In fact, on Friday, I talked about this because this to me looked a lot like the Qs. I was like, well, we're hanging out right here with a little wedge. We have this 200 moving average pullback zone. This is going to be a key spot for the Mags, because if the Mags this week can close above it, then we can certainly have a decent recovery. Where what was kind of beat up, mainly in the tech sector, probably growth momentum took it the hardest over this like 10% correction. It was mostly out of growth, out of momentum, going other defensive spots, but it was beat up so quickly and aggressively that it did make Mag 7 all of a sudden pretty attractive again. So it's okay. I think that's fine. But we pulled right back to the 200 moving average. Is this a bull rally in a bear market? Well, there's resistance points if it is. If this is a high, low, lower, high, lower, low, if this correction just continues to head higher, then this is a bear correction in a bull market. So it's to be determined. But I'd like to see, if you want to see more of a sustained rally by these bulls, getting above this 200 moving average is going to be really important. And that's on Mags, that's on SPY. So SPY, we're just above the 200 moving average right now. I think that's good. I think on Qs, we pulled right back to it, which we did. If we close a little bit higher than that, that is fine. Okay. The Dow also pretty nicely above it, and we're above the 38% zone. So hopefully we are still going to pull back into like maybe the 50% zone going to this April 2nd announcement. April 2nd could turn out to be the buy the rumor, sell the news situation where, it could be the bottom is in the tariff talk when it comes to the reality of the markets, April 2nd and onwards. It's already priced in, and, the market may go higher April 2nd and forward. Right. So that's Dow. Russell making a nice little comeback. I should have some trades running on the Russell. That's also looking pretty decent. Russell here has some shares covered out to April. So this trade, okay, these are in profit. This is good. So I might take some profit on this one. IWM. That is a covered call on the shares that I own. That's a 1-1 trade out to May. So the most I can make on this trade is $246. I'm up about 58% of that right now. I mean, I can sit and wait for the next 53 days and hope that small caps get better, or I can just be happy that I'm up 50+%, take the profit, get the buying power back, and let this do what it does. I think I'm just going to do that. I mean, and I say that because if we continue to go higher on the shares that I own, I mean, I'm still going to make about $2,400 on shares that I own, give or take. So this one, I don't mind, just a little income trade, take the profit and move on. For me to wait an extra, 53 days to grab another dollar doesn't really seem like a good use of capital, considering there's nothing below by 190 put. So 246, trading for $1 right now. See if I can just get out of this for $1. Close it out for $1.03. So that's a winner on IWM. So that was 243. 246 to $1.03. So $1.43 was the net profit on that one. $1. Just the shares. This account, no IWM exposure. This account, no IWM exposure. There we go. Right here. Close for $1. Ah. $1 not filling. $2. $2 filled. Got it. Doing a course for options? Yes, I've got a course. I've got 2 courses for options. Give me 60 seconds and I'll share them. Okay, just to make sure I don't have any IWM here. I don't think I do. We're good there. We're good there. Good there. And good there. Okay, good. Yeah, if you are interested in an options course, so I've got a course for $27. It's a quick guide for practical options. I'll share the link. And if you like that course, there's an upgrade to a full course from 4 videos to 11 videos, 13 strategies. This one has basically, 2 to 3 core strategies. So it's a Vimeo on-demand page. I just posted that in the link. And if you like the full course, go practical options, and we'll do the full course. For this full course here that I usually sell for $497, if you are a member of the Pulver Alerts through A1 Trading, this is included. So I'll post it a la carte, or you can up for the Pulver Alerts, and it's included. But I'll post both of them. You can pick, but that's all based on options. So practical options meaning, I want to get over the learning curve, the jargon, the vocabulary. I get into the charts and I say, if this happens, this is what you need to know, right? If I place this trade in this strategy, what does it mean? I'm actually working on courses for, practical Forex, practical futures, practical stocks, same type of thing where it's like, what makes it actionable? I don't need to go through Investopedia type definitions and Investopedia type basics where you can find that stuff online. What I'm looking at is, here's what I'm doing in the live markets. Here's what I'm thinking of when I place a trade. The way that I manage capital, it's typically risk defined. I know that if anybody follows like Tasty Trade out there, Tasty Live, their go-to trade is like the strangle. Sell a call, sell a put. It's undefined risk. You go 45 days out, manage at 21 DTE, and it works really well until you have an outlier type risk, and then it busts up your account. You lose weeks and weeks, if not months of profits. Some traders get super aggressive. Some traders have nasty, ugly drawdowns with outlier moves. I hate undefined risk for that reason. It's not that I don't love the strategies because they work and they work over and over, and I see it, and I see a lot of traders that do well with it. It's that traders with undefined risk, they have the potential of an outlier event, volatility event, a black swan event, or one single steady direction that they can end up losing, and then you end up having to manage and roll and fight your way through bad trades. I look at it as, look, if it's undefined, if it's defined risk for me, the market can go to infinity or to zero, hypothetically, and I still have what I initially risked on the trade. So that might give me a little bit less flexibility when it comes to like working through trades, but just a one-off trade is something I can manage. Another off trade that I can manage, and I just keep taking thousands of those trades. It works out pretty well. Okay. All right. I've got one more trade running for today that I want to discuss. We'll go a little bit more top down. I put in a trade this morning on SPX for a butterfly, and I pulled about 70 cents credit. It's already trading for about $60. which means my 70-cent credit's probably trading for like a 10-cent debit or so, which is good. So this means my 56.95, as far as the delta, 56.95 is now trading at like a 6 delta. So there is like a 94% chance that this will finish out of the money, which means this trade will be good for the full 70 cents credit. There is a potential profit trap. We'd have to have like a monster. We'd have to take back the entire move today, the gap and everything, in order for that trade to be threatened. So I think what I'm going to do here is, 70 cents credit on the day. If I can just close it down, let me see what this one's trading for. It's trading for about $60 right now. So if I can just take I'll go down to 5 cents. I'll close it at a 5-cent debit and just let it marinate for the day. So my 70 cents, if I close it out for 65-cent net profit, I'll take it. By the end of the day, it might just cash settle and give me the full 70 cents. That's fine. But I'm going to take that. Okay. So all in all, like, today's been pretty fantastic. Up 65 grand on the day. That's a big comeback. I'm back up near, I'm not at the all-time highs, but I'm near for the year. I was at 195, kind of the peak. But what I'm kind of happy about and fairly proud of is we're still, 6 to 7% away from the highs, and I am about 1% away, not even 1% away. I'm like 7 grand. So 7,000. I'm 0.2% away from my all-time highs for the year. And we still have, 6 to 7% to go. If we were going to sniff all-time highs again for the year, bring it on. That would be a pleasant surprise. In fact, it might be a good time for me to be invoicing clients if that's the case, because if we're up, 250 to 300 grand for the year, I think it's appropriate. I didn't have any invoicing through the election last year. We had a bunch of profits through Q4, and now kind of surviving Q1 is good. So we'll see. But what I'm preparing for is if we are heading into this 50% zone, that's a lot of support in here. I could see the bears making another case, or at least try to maybe claw back a little bit. But I think a lot of this is a relief rally. I think a lot of this is the quieting on the news front with tariffs. Look, price action like this, price is mostly the sentiment driver. I think the reason this became so extreme and felt so nasty was because sentiment tipped so bearish. But it's this is what the market has to price in. The market isn't just thinking tariffs. The market's thinking, well, if we have tariffs and we have higher inflation, what's the Fed going to do? And what about slower growth? And what about earnings compression? What about revisions? What about unemployment? Like, all these things were getting priced in, like, okay, this could get really, really bad. But labor's been steady. The Fed's been reassuring. The tariff talk has become a little bit softer, and the market's giving this kind of glimmer of hope. Which, again, I think this is, look at your levels, and let's put a pin in this conversation and go out to 30 days from now. If 30 days from now we're still hanging out here, then there's just a lot of indecision. If 30 days from now we are sitting near within a whisker of these all-time highs, then this tariff talk and this tariff tantrum was essentially over, and the market is still showing resiliency, and all is well, right? If this market is lower in the next 30 days, then we are probably in a bull rally in a bear market. And this is likely going to get worse, okay? But as I said, I don't think that Europe and China and everything that's performing so well right now that's non-US will continue to perform so well if the US is going to tip over into a bear market. If the US tips over in a bear market and we all of a sudden have bear market that shows recession, we've seen, if you're following macro analysts out there, their risks of recession have gone from 10 to 20 to 30 to 40%. I've seen as high as 60% risk recession. It doesn't mean anything. Look, even during recessions, the market's open. You're going to trade through it or you're not. So I'm going to trade through it. Whether this market is making all-time highs or making fresh lows, I'm going to trade through it. All right. But the point is, if we're looking at the technicals, this to me is where the bears can step back in and fight. It's coming in. It's coming in close. So this is why I'm using this opportunity to take so many profits and take so many trades off, because if we are going to see another flush lower, I don't want to be sitting here with positions that require a bullish direction. So the positions I've been nibbling at down here are now showing some profit. I'm taking those profits. A lot of them are, 50, 70, 90+% profit. So rather than hoping that I hold this all the way to expiration, I'm going to take the lesser profit instead of going for max profit. I'll take a little chunk of that, but a majority of the profit and not have the risk. Okay. A while ago, you mentioned how you trade gap fills. I didn't actually mention that. I think that, all I've been looking at here for the last couple of weeks is this area is a gap fill from both sides, right? This is the election gap, but you can see that all the support, all the support, all the support, all the support, all the support in here even, and that would be a big window for the bears to then say, okay, look, bulls, that was a cute little rally. Now the bears can step back in. Here's why. And whatever news gets attached to it, we'll find out. But I would say watch your price action carefully in here. This is now, I'd say the bullish gap from today is now a potential target for the bears. Right. So if we push up into this area here, pull back in that like 5-0 zone, that's nice equilibrium going to this like April 2nd tariff discussion. But the bears would be coming after this gap here and this gap here. So I'm not trading that right away, but I wouldn't be shocked to see if the bears do step up that we go after a, gap fill. If there's more momentum, they take out that 5,600 low, then that gap right down here to the, previous lows we had, gap 1 gets tested, gap 2 gets tested, and we're no better off than where we started other than being back at the lows again, and that's what I'm saying. Like this volatility situation could pick up and there's more ahead, but again, I'm thankful for a little bit of a relief rally. The technicals worked out pretty nicely. There's harmonic merge. Like still got a little bit more upside to go, whether it's today, tomorrow. We'll see. Okay, quickly, let's go. I'm just going to be on here for just a few more minutes. Natural gas. Let me go back to the daily chart. So oil is moving off the lows just a little bit. That's fine. I don't have any trade in oil. I'm still long natural gas, and I'll maintain that long position on natural gas. Gold, nice little pullback on gold, as I expected, wanted to see. It's happening. We got now a couple days of some red, which is totally fine. Any type of 21 or 50 period moving average, honestly, that's not enough for me. I know that I say I want to start nibbling on gold if we have some pullback levels. We have central banks buying gold at a record pace, but I would say this 200 moving average is legitimately why I am not bullish on gold right now. I'm not bearish on gold. I don't know what this would have to do. For us to find this 200 moving average, we would probably have to see the U.S. would probably have to sell gold and cash in. If they did that, that would fluctuate gold pretty aggressively. That could be what causes there could be a myriad of reasons for why it would cause a decline in gold. But technically speaking, this level and this 200 moving average with this distance away, I'm just interested in buying dynamic support. I like positioning for longer term gold bullishness, but I think in the short term, that's why I shorted gold with a futures contract. So my gold futures trade is max profit about $120, and I'm actually somehow showing I'm showing a profit of it's about 96%. Okay. I still have a profit trap. This is looking good. Probability of profit on this one's still pretty darn high. Let me go to the trade on this April 24th contract. What's my April 24th would be here. My bull call spread is the 80 by 85. My put would be it's an 8 delta, which is about a 91 and 92% chance it stays out of the money by the time that expiration rolls around. So I still like the trade. I think there's the high probability of an income trade. That's what I'm doing right there. So that's the trade I'm in. But I still have GLD. I still have PHYS. I still have CEF. I still have some, silver and gold plays that are both looking pretty good. I want to add to both of those on pullbacks. Okay, silver, same thing. Really nicely supported off the 200 moving average. Any dips into there, I'm looking to buy more. Bitcoin, nice little rally on Bitcoin, getting up above the 200 moving average, which is important. Okay, it's been, what was breaking below the 200 moving average, now back above it. I think that's important. MicroStrategy, good. I have to wait a little bit longer for my income flip here. For above 310, I get it called away. If we're way above 310, then I'll probably go out an extra week or two and just keep generating some income on the shares that I have. Otherwise, I get it called away for about $50 a share. Coinbase up to 199. I'm going to watch this one for this week. This one should be looking good for profit. There's obviously some volatility ahead. I'm only a few dollars clear, but let me check my coin positions and then I'll wrap it up. So this trade expires on Friday. So right now I've got about $1.08, $1.08 in credit. It's trading for about $21 right now. If we stay above 195 for the week, then this is kind of maxed out. Now, the nice thing is too, is this is going to be like kind of threading the needle here. But if I'm greater than 195, but I'm less than 200, or even if I just stay at 200, which is current price, then there's potentially a $5 trap here plus the $1.08. So I could make $600 on the trade by Friday if it's kind of in that sweet spot. I'm not, begging for that to happen. I just think it'd be nice if it was above 195. I'll take the income trade. Okay. And that should about wrap it up for today. Copper, this one's looking good. This is another reason that I don't think the global economy is headed into a recession. This is part of the reason I also think the U.S. is headed to recession. Copper is the self-proclaimed, Dr. Copper, PhD in economics. If we're in a recession, copper would be lower. If we're not in a recession and there's growth ahead, whether it's one country dominating like U.S. or China, or global growth like we see with China doing well, Europe doing well, we'll give the U.S. a resiliency card, right? The U.S. is not doom and gloom. I think it's a resiliency card. We'll see what things do. But copper is still surging to high. So there is, and copper might be for EV demand. It might be for housing demand. It might be for telecommunications. It might be for AI infrastructure and energy plays. It could be for a lot of reasons. I still like copper for pullbacks. If we're going to stay in this like pretty resilient global economy outlook, then any pullbacks in copper, I think we go to fresh all-time highs. My only concern on copper would be right here. If we hit these highs and we just dramatically drop, then okay, I'll revisit this whole global economy, going to the moon type thing. So if we don't stop here and we just keep going higher, then I think the global economy looks pretty good. And the U.S. needs to stay resilient, and it probably will. Okay, Japanese yen pulling back. Still fine on EWJ, still fine on DXJ. DAX sideways. I think this is a pretty good looking bull flag, to be honest. Look for your dynamic support levels. FTSE, same thing, well supported in these dynamic trend levels, 200 moving average especially. Argentina, nah. China, Brazil. I want to see Brazil get above the 200 moving average. MAGs right back to the 200 moving average. This is an important week. There's obviously a gap fill here on MAGs. If we get above it, that's a good sign. Okay, if the bears claw back, we can fill the gap or try to test the lows. But MAGs was beat up, probably worse than others, just because it was so concentrated. But this combination of either MAGs makes a comeback and lifts the broader market, now that we broaden out a little bit, or the RSP, which is equal weighted, still, from recent high to low, I mean, you're still down 10.3%. So this whole idea of like, by equal weighted, I mean, that's great, but you're still down the exact same pullback amount, right? We had about a 10.3% correction on the SPY. It just looks different. Like this RSP was high, low, lower, high, lower, low. And lo and behold, I mean, I had this yellow box on here drawn to symmetry. Did I not? High, low, lower, high, lower, low. And look at where we turned. I mean, this stuff works. So this so far is pretty darn corrective. I mean, does it come back into the channel? Yeah, sure. Does it get above this channel and have the ability to maybe revisit all-time highs? Yeah, maybe. Right? Or we turn again and we make another low and we have a channel. And all of a sudden, this is the conversation of bull rally in a bear market. But to be determined. So we don't have the evidence yet to say that this is a bear market because we haven't made a fresh low. The way that this one spiked down, we haven't made a fresh low. So this is high, low, lower, high, lower, low. Yes, bull rally in a bear market. But if this is high, low, and this is just a correction like we had back in August, and this market's going to spend its time here and then consolidating and then going higher, well, that's a cup and handle. That's a reversal pattern. This is why there's so many failed head and shoulders and failed topping patterns, because this market finds a way just to get the cleanse that it needs and then buy the dip. And we don't know. But we're going to find out probably in the next 30 to 60 days, whether or not this is a rally that's remaining, remaining momentum gets us back up into, reasonable all-time highs, maybe even sniffing out these all-time highs, or we're back down to the lows and we're going to fight for some other structure support. Okay. Like I said, my biggest concern is that this area breaks. If the bears break this area, I don't want to be super bullish on anything. I would be hedging. I would be doing bear put spreads, bear call spreads. I'd be selling premium and just trying to say, look, we're going to make lower highs and lower lows. It's not going to be easy, but that's probably the path of least resistance if we get there. Some out of the money puts could do really, really well. I just don't know if we have the evidence for that fall. If we have this fall, I think Europe stops going up. I think China stops going up. I think there's so many ramifications on the U.S. falling like this that it'll stall the entire global economy, because that is not just a little correction, right? That is like literally world's biggest consumer, world number one, is now in a recession. And how bad does it get? So not there yet. So, okay. I'll let you go. Thanks for being with us today. We'll see you later this week. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.